Perhaps there's a price shock coming for houses in Sydney next year, with prices expected to fall by as much as 4%, would you believe? Joining us live now is the Chief Investment Officer at the Motley, Scott Phillips. Scott, good to see you. So what'll spur this on?
Pete, g'day. It's everything that's going on in the economy right now. This is probably, look, the numbers, the forecast, they're always best guesses, but no one would be surprised by what SQM Research believes is behind this one. The combination of higher costs, higher interest rates, meaning more mortgage stress, and potentially an increase in unemployment if the economic downturn continues. Add those three things together, it probably means both lower affordability, but also more houses on the market, more forced sales or motivated sales by people who simply can't afford the bills or, unfortunately, who might lose their jobs in the process. 4% is their forecast for Sydney. They're expecting falls in Melbourne, Canberra, other capital cities as well, for a total across the country of 1%. Now, I don't know about you, mate. If someone had told me the economy was going to slow down, unemployment would rise, and the worst that would happen to house prices was a 1% fall, I reckon if you're a homeowner, you'd probably be pretty happy about that. If you're hoping to get onto the property ladder, you might be disappointed it's not more, but that's the situation we find ourselves in right now. So, yeah, look, 2024 is going to be a tough one economically. We know that. House prices have been pretty resilient thus far, but at this stage, at least SQM's numbers suggest a decline in house prices.
Okay, but isn't Brisbane and Perth going to be on the up?
Yeah, and this is why it's a really different one by state. So if you think about where mortgage stress is hottest or hardest, it is Melbourne, Sydney, Canberra, those capital cities where prices are highest and living costs are highest. Other capitals, Brisbane and Perth, lovely places to live, by the way.
Very good.
Yeah, exactly. Are going to have less stress because they've simply got lower prices overall as a proportion of income and in absolute terms. So, yeah, you're right. There's going to be puts and takes across the country. And then Hobart's always an outlier because it tends to move meaningfully behind the rest of the country in terms of house price movements. We saw their increases probably about 12, 18 months delayed. Way back in 2021. So it'll be interesting to see how this all nets out. But at the moment, at least, the East Seaboard capitals, where the mortgage stress is highest, probably the capitals that are most likely to see price falls next year.
All righty. RBA minutes out this morning. What'll it tell us about next month, Scott?
As little as it can in the obscure bureaucracies that only the RBA can write with. But we will be looking pretty closely as to the rationale for the decision they made this month. And try and read the tea leaves, work out what of those issues remain or could remain an issue. Any hints they give, probably unlikely, but as to how they're thinking about what might need to happen next time around. There's the old story of, as I said, interest rates running in pairs. If you're going to increase once, you maybe you're going to go twice. Big issue too, mate, is they're not meeting in January, which doesn't have to be a problem. But what the RBA will be very keen to remember is once they meet in December, that's it for 2 months. If they feel like they might need to do something over that 60-odd day period, they may decide to go early. The flip side, of course, is they may be happy to give us a couple of months off. We're all hoping that's the case.
Yeah.
But the data will tell. Unemployment was pretty strong. Inflation data still to come out between now and next month. But, yeah, those minutes will tell us how they were thinking last month and the thought they'll take into the next meeting.
It'll all be live when it happens here on Sky, folks. As usual, Scott Phillips, good to chat.